be read a third time and do pass.
The legislative framework for the oil sector continues to take shape as Parliament passed a second bill that seeks to establish an oil refinery for the country.
Refining it, transporting it up to the points of storage, from where then the downstream picks on, where you have the distribution by the various oil companies of the finished product.
The Petroleum Refining, Gas Processing and Conversion, Transportation and Storage Bill 2012, if assented to by the President, regulates licensing, refining, transportation, decommission of facilities and compliance to environmental standards. This second bill generated little controversy, with some MPs expressing concern about the country's move to build a refinery in Uganda.
Because when you look at the economics of a refinery, Kenya is going to have its own refinery. So is Southern Sudan, or both of them might have one. Congo is going to have its own refinery, and Uganda having its own refinery. A refinery is a billions of dollar investment. Billions of dollars. So does it make sense?
But that aside, the East African Community Partner States meeting in Arusha resolved that a refinery be built in Uganda.
The recent discoveries of oil in Kenya and in the region pose a challenge as to whether building an oil refinery in Uganda is commercially viable. Kenya and South Sudan have already agreed to build a joint refinery.
In the last 15 years or so, almost 13 refineries have closed down on the whole continent. Yet there have been billions of dollars investment in those refineries. We would be thinking of one refinery maybe for the entire region. Bigger refinery. Then we can have the byproducts sold within a market.
A feasibility study was carried out, and it was established that it's a viable business, and that is why we are going in for it.
The Energy Minister says 14 countries have so far expressed interest to participate in building the refinery. It will also be a shared responsibility of oil companies, Uganda, and other regional partner states.
There are companies from China, there are companies from Japan, there are companies from Korea, there are companies from UK, there is Italy, there is the Middle East.
It is anticipated that by 2016, Uganda will start consuming its own oil resource.
We intend to have a refinery which can produce 20,000 barrels per day as a start-off. It can come online within 3 years. Now, this refinery can then be expanded to produce 60,000 barrels per day.
The current consumption capacity of petroleum products for Uganda stands at 1 million liters per day. Currently, 3.5 billion barrels of oil have so far been discovered from only 40% of the exploration areas. Jingo Francis, NTV, Parliament.